Welcome to today's daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Thursday 28th of November. A couple of key factors affecting markets today. We've got a response to Donald Trump signing these two congressional bills on Hong Kong. He actually signed them into law, so that actually has riled up China somewhat. Beijing has talked about the sinister intentions of the US in delving into the Hong Kong situation, and the question mark would be whether this has an impact on the trade negotiations that are seemingly moving towards phase one, whether that sort of creates a stumbling block to those negotiations. No real sign yet that the markets are sort of moving against that, but there has been a mild moving towards safety on the back of that. A little bit of dollar correction. Nothing too significant at all, really. It could be the fact that the Treasury markets are not open today, so you've not really got a reaction there on Treasuries. So it's Thanksgiving public holiday, so it might be that you've got a muted reaction due to that fact. However, there's only a slight reaction on gold higher, a slight reaction on the yen gaining ground, so nothing really decisive in those moves. Also, equity markets only sort of reacting around about a quarter to 0.5% lower on the European indices, so it's nothing too decisive yet on this reaction. The Chinese yuan, for example, again only marginally weakening. So we'll probably need to see the reaction maybe tomorrow when you get US markets reopening from the Thanksgiving holiday, but maybe even more so on Monday, where you get the full response, because US Thanksgiving public holiday is an odd one. It actually sort of is effectively a 2-day holiday, or 1.5 anyway, so it's you may well get more of a response on Monday to this. You've also had overnight a reaction in the UK to a poll that suggests that the Conservatives are on course for quite a sizable majority in the UK election. Now, obviously, it's still very early days, and these polls are often overshooting, but this poll did actually accurately predict the hung parliament in the 2017 election. So there has been some credence given to it, but still, I think it's very early days yet in this election campaign. Still, nonetheless, sterling has responded higher. Not yet broken out. 130 big figure seems to be a bit of a key moment there, and it's still below that on cable. So that takes me to the data points today. Bit of a Eurozone focus today. You've got the Eurozone economic sentiment. Sorry, that's not even today, is it? Eurozone economic sentiment at 10 o'clock. You've got industrial sentiment and services sentiment. All are data points that are expected to show slight improvement on economic sentiment and industrial sentiment, but slightly lower on services. I'll show you the charts. Actually, you can see that economic sentiment has been consistently declining, as have services sentiment and industrial sentiment, so you need to see those data points picking up for any real suggestion that the Eurozone economy is turning a corner. I think at the moment it doesn't look all that great. A slight tick higher, but whether it has a material impact on the euro remains to be seen. So that takes me on to my chart of the day, which is Euro Canadian. Slight move against the Canadian dollar today, with the weakness on the Canadian loonie. However, what you have seen is recent times this corrective move on Euro Canadian, breaking this uptrend. Now, what we are seeing is a move back into a resistance band. 140, if I show you on the hourly chart, it's much better. You've got this resistance band, 146.40 to 146.75. You can see that sort of comes in as a sort of a pivot line, really, and you're now trading into that resistance. So how the market responds in this resistance will be interesting. You've got the momentum indicators, which are ticking higher, actually into the 60s now on hourly RSI. That's better than it's been throughout the corrective phase. So how this resistance band is treated is going to be an important moment, because, as I said, you've broken that trend lower. However, you've got momentum indicators on the daily chart, which turning points, RSI 45 to 47 area. seems to be supportive in November, coming back to that and ticking higher. MACD lines still positive despite crossing lower, and also stochastics as well, starting to, are they bottoming out? So this is an important moment. If this rally starts to roll over and fade again, you could well see the corrective move continuing back towards the test of that 45.40 level of support that we saw earlier in November. So this could be a key crossroads moment for Euro Canadian. Do the bulls go with this recovery and really push forward in a move that takes it above 45.75, or does it fail in this resistance band and start to falter once more, because the corrective move has been building given that trend line break. So key moment for Euro Canadian. So I wish you good luck in your trading. Click here to subscribe to our analysis videos and go to our website to sign up for our webinars.